Good morning, traders. It's 8:01 a.m. Chicago time on Monday, the 10th of May, 2021. It's 8:01 a.m. Chicago time. This is episode 1990. As episode number 1990, derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Interesting to note, history. Important events in 1990, where the reunification of Germany, the beginning of the Human Genome Project, the launch of the Hubble Space Telescope, from which we've received a ridiculous amount of images and insight into the universe, and the Baltic states declaring independence from the Soviet Union. Big year. And if you were born in 1990, you either are or are turning 31. Anyway, so let's move on. Something different, I guess, this morning. So we're looking at the pre-market summary sheet here. Again, derivatives trading is not suitable for all investors, but overall, looking at what the market is doing, there seems to have been a slight push-up in the overnight session and in the extended trading hours, which has resulted in the market turning back and coming back, at least in the S&Ps. And it looks like the Nasdaq's actually weak this morning. The S&Ps actually has made new all-time highs, pushed the prior high, which was at 42.32 quarter. To 42.38 quarter, and has come back in, and it's trading on top of the high volume node from Friday, the acceptance point from Friday after the rally, and so the position of the market overall is neutral, seeing mixed messages. The Nasdaq's the weakest, 53 points down. The Nasdaq's trading at 13,657, or down 0.39%. Silver is the leader today. Silver's up 44 cents, and the British pound is also relatively strong today, up 1% in the futures. Gold up 0.64%. Gold trading at $18.43, up $11.60. The gold is definitely taking a bid. And so that's where that stands. Crude oil up 39 cents. Looking at crude oil, gap up overnight and holding sideways in the balance profile. The S&Ps so far today up 3 points, relatively unchanged, unremarkable. Currently, the S&P is traded 176,000 contracts. And is balanced. It's got like a weird profile. We'll look at that in a minute. 16 points of range, as you can see in the pre-market summary sheet here. And overall, nothing too remarkable today. Ether has crossed 4,000. Can you believe it? And Dogecoin, which was really heralded by Elon Musk and has moved from a penny to, I don't even know what it got to, 70 cents or something. Took a massive hit on Saturday night after Elon Musk appeared on Saturday Night Live, and part of the conversation involved him saying it being described as a hustle. The coin dropped to 44 cents or 42 cents. Something like that, losing about 25 to 30% of its value. These are ballpark figures. The thing moves around a ton. In terms of earnings, we got Tyson Foods, Duke Energy. These are the big ones. After the market, we get Occidental Petroleum and AOCOM, ACM. These are all, I filter out my earnings to only issues that are $3 billion or higher in estimated revenue. Let's take a look at what was expected on Friday. Let's maximize the screen here. Friday expected a minor pullback Friday we opened up in a gap above 4,200, and I was looking for it to pull back slightly, potentially to 4,202 or so, and I was looking for a rally up to 4,220 and through, and to push to 4,230. As you can see, topping out at 4,230 up here before pulling back to 4,220 and resting for the session. And that's pretty much what took place on Friday. Nice big rally day there. Here's the action on Friday. Let's kill some of these lines. There's the action on Friday. We just have a market that opened up at 4203.5, pulled back to 4195.50. So it dipped right into the prior day's range. However, it could not hold that range. Remember, the green line, this dark green line, is the high or the low of the previous session. We see it dipping in here, rotating down, and then we get our first impulse of the session. Pullback is shallow. This is where we start to look for long breakout trades. This is a gap reversion and test, and the test was successful. So from this point on, we're looking for it to climb higher, and of course 4220 is the key. Let's change this color here a little bit. 4220 is the key test area for the session, and that's what I was looking for. 4220 got hit right here, and then from there I was looking for 4230 test, and the 42. Well, let's kill the stock zones because those are for today. 4230 taken, and then we managed to get to 4232.25, new all-time high for the S&P, and then for the rest of the session it was pretty much sideways. Nice little pullback trade in the afternoon. The 4216 right here to the full session mid. Pretty sweet setup there. We could not test the mid. Full session VWAP at 4216. We could not test the mid at all throughout the session. The action remained well ahead of a mid test, and it finished strong. So what we have here is a P-shaped profile in a market that has squeezed and was accepting these higher prices. The high does not look like an excess. It clearly does not look like the market has found its sellers. It has not found its sellers, and therefore we expect it to continue to crawl up in the extended trading hours. Delta was with us all session, positive until the end. So pretty relatively benign delta there. Let's kill these. Here's what's happened since. We reopened right where we closed on Friday. Pretty orderly open last night. We immediately push up to 4238.25, and then we sit sideways through the Asian session, and then the Europeans come in right in here. A little bit of selling to the low end of the range to push the low for the extended session, and now we're holding right on top of the VWAP and the mid. So what we have here, 4230 VWAP mid and the overnight point of control 4230. I'm just updating the cloud levels here for Convergence members. There we go, levels updated. So we are opening completely imbalanced this morning at all-time highs, at the all-time high 4232 in the day session. So likely to be a pretty choppy open this morning. So that's how that's playing out. Looking at the composite, look at what was accomplished last week. We had, higher lows, higher lows, higher lows, higher lows on the weekly. And then last week really blasted through the weekly low, ending the one-time framing up, and then blasting through to the other side. What we have is Thursday was a neutral extreme day to Wednesday's session, not the IB, but the actual trading session. So Thursday showed some extreme bias to the buy side. So we came in Friday expecting the rally, and that's what we got. That's what I outlined in our plan on scenario 1. This is a very bullish Thursday right here. And then on Friday, we went and pushed the weekly high, which is the all-time high, for new highs. And so what happens is the week then has a neutral extreme bias to the prior week. Does that make sense? Is that breaking down for you? We got the clue on Thursday that the bias is to the long side and that the longs are stepping in. Then for the week, the way we finished the week is we finished the week with a neutral extreme up bias on the week. Pretty strong finish. Multiple distributions on the week, and you can see right there 41.77 to 41.80 being a key figure last week and the week before, and we get multiple distributions here to deal with on the way down once we turn. So let's not sure why this is. So what we have here is a nice distribution up top, which is where we're opening today and why I'm expecting chop. Then we have a nice distribution in the middle, very clear with a low volume node. And then we have acceptance down at the low end of the range. And that's where the bounce is. 41.70 is the point of control. But a lot of the volume has occurred right up here in the 41.80 to 41.77. So this is if this starts to rotate lower, we could see the 41.80 fairly quickly. But this finish last week was pretty good. Last week's range was 111.75, almost 112 points last week. Pretty strong, given the week before that was very, very poor. The range was very tight. And the volume last week was also pretty good. We had more than 1 million contracts every day, and we've taken off. So we've moved from this balance. We've poked higher 2 weeks ago, and then last week we poked back into the balance, could not arrive at the other side, and pushed through the high side of the balance. Still very bullish. So if you're tired of a bullish market, you're going to continue to be tired of a bullish market. There are no signs that this thing is easing off. Let's take a look at what we've got in terms of the heat map. Seeing a bit of 42.20. It's got a large block in it right here. Large block. You can see the blue in there. That's likely to trade out. That's size that as we move down there, that's size that's likely to trade out. Above, though, it's all bits and pieces. So if we look above, you can see at 42.40, little bits and pieces. The next line down at 42.31.50, bits and pieces. These are likely to trade through with the overnight point of control right here, 42.30. To me, this doesn't look very clear. It doesn't look like the market is very clear about where it's headed. It's just kind of twirling around. We see a sweep. We had a sweep earlier, a little bit earlier. Also at 7:36 Chicago time, there was also a sweep down. We're still getting these strong sweeps. Look at the delta on that sweep. The delta got knocked by about 1,000 contracts. Nothing big, but we still have that the action where the market is stepping up, sweep down, step V bottom, step up, sweep down, V bottom, step up, sweep down. We're still seeing that action. Very frustrating to get swept and to have that sweep your stop, turn around and go back to exactly where it started from, but you got to hang in there and be patient. Okay, let's take a look at what's expected for today. Just set up this chart. Okay, what are we expecting for today? Again, we are opening on top of the overnight point of control, on top of the high volume node and the extreme of the range from Friday at 42.30, 42.28. We are right on the edge of what's going on. We're opening on top of full session mid, full session VWAP, expecting a choppy open, expecting responsive selling to bring us back down into the 42.20 area, looking for that bid to trade out 42.20, looking for an impulse back towards the overnight point of control and for it to move towards the high and hold steady here, looking for it to break. The overnight stat is well attainable. The range is very normal. Switching colors here for scenario 2. Scenario 2, open auction that drifts around and then takes a bid later on and starts pushing 42.40. 42.40 is a measured move here. That was a target last week. 42.40 and then getting to the magnet at 42.50 before backing off. Not expecting too much in terms of selling. Scenario 3. Scenario 3, push up, open, test, drive lower, get to that overnight stat, get that done, and then start squeezing down into the old high of 42.1150 before bouncing back up. That's scenario 3. This is looking a little bit tired again, but overall we have one-time framing up on the weekly, daily. We're not letting go of the high, so we have not found excess highs. We did not find sellers yet, and as long as we don't find sellers, the auction market says it'll continue to move in that direction until it finds an excess. And if we haven't found an excess, we'll just keep advertising higher and higher prices until the sellers feel like it is too high and we see them come in. How does it look like when they come in? It looks like a 1.5%, 2% down day with a follow-up day that attempts to regain that and puts in a lower high or a weak attempt at the high, and then continues and moves to take out the low of the 1 or 2% day, 1.5% to 2% day. That marks an intermediate high. That's likely to reverse the time frames on the weekly, on the daily and weekly, and we start attacking the month. Once the month gives up, then it'll just rain. But we have not seen that in a long time. The market's somewhat complacent now with a buy and hold kind of scenario. So more of the same, and we'll continue in that direction until something changes. Okay, we cannot, as traders, as day traders, we do not make change happen. We simply surf the waves. It is the winds coming from Alaska that are causing the ocean to shift and for the waves to form. That's just beyond our control. But our job is to just take the next wave and surf it as best as we can. And if things change, then we'll change how we surf as well. Good luck, and I'll catch you tomorrow morning. Take care.